Well, good morning, everyone. Scott Henderson, shooter. And hey, we're going to cover swing trade notes this morning. Look for some setups. See if we can find anything in this mess that we have going on with the Iran war. Of course, at the end of our presentation, please review our disclosures. Notice that the dollar basically dumped, and what happened to the indices on that dump? So, that news yesterday that we got that there was some kind of deal, ceasefire, or whatever it was. Notice how responsive those markets are. That is not normal, by the way. That aggressive move in after hours was solely caused by some very big international players who basically sold the dollar. They also bought some gold, and there were huge insider buys on the indices for us to just turn right around and give it back up. But now the pattern I'm looking at, I think further downside. So as far as the dollar, I think we head back towards about 96, which should give equities a tailwind here. So that's on the plus side. Let me jump back to my main chart, major markets, because I got it in the right place. Okay, look at TLT. I think TLT heads towards equality here, back around 93. Not a bad spot to put something on here. On top of that, if we have economic conditions, we should see a spike in treasuries, I would think, based on the market conditions. However, I'm just going to be candid. Not much is working. This chop just eats retail investors alive because you can't even scale into a position with the ranges that have been occurring in some of these names because we have not found a definitive bottom in so much. In other words, price has repriced to some degree, but I don't think it's done yet. So the names that we want to look at are the ones that have really dumped. And, I'm going to come back to treasuries here. Treasuries are in a good spot. I mean, we've now put in what appears to be a higher low. However, I do think at some point treasuries get a bid. Now, let's talk about what's going on in the Straits of Hormuz and how that is going to trickle down into the market. And right now, we have huge scarcity coming. I mean, I'm hearing numbers at, $8 gasoline here in the U.S. because the 8 or 10% shortage from the Straits being shut down is going to have a significant effect with fuel generation in the United States, to the point we might actually see some degree of ration. Now, I hope that's not the case, but if we see a continued slowdown in freight, shipping, and other forms of distribution and supply chain, it's just we have the potential of really coming off very aggressively here, no matter how bullish the charts look. So, with that ado, let's jump into the SPY. At this point, I think we're done. I think the bottom's done. That doesn't mean we don't reject right here on bad news and come in and put in 593. Very challenging look with the circumstances that we have. I have two maps that I'm looking at now. A shallow kind of flat, which is sort of where my bias has been anyways, until this was taken out. Then I obviously had a deeper. Notice how close we tagged that speed line. So that's actually pretty solid support right there at that 627. So I would think this is the most likely outcome. So we get to about 728 and then we come back. So we are in this flat till January of 2027, if that's the case. Just let that sink in. So we're going to be here a while. So that's just, giving you the thought there. Now, the NASDAQ looks a little more impulsive, and it doesn't look like a flat. We have a clear primary wave one, nice clean retrace back to the 382. So it wasn't shallow, but it wasn't deep, but it was nice and euphoric. And we've clearly had a bid off of it. And there are certain names, and if you'll notice what I've been posting in the flow, we are very thin on the flow, which, implies to me that this traffic that we're seeing or this flow that we're seeing is coming straight from the indexes like the SPX or the NQ or the ES, where we have large buying in those areas versus individual stocks. So they're buying the indexes, not necessarily buying the stocks, which is driving the pumps that we're seeing. So I think we have a much more bullish skew. However, with the market sentiment and what's going on in the Middle East, I honestly, I just can't chase that with any conviction. And yesterday was a great example of that. I mean, it was where going into the open, I'm thinking about short. By the end of the morning, I was thinking about long, right? Then the news came out towards the end of the day, I was thinking about shorts again. And it's like, okay, time to get out of the chair, go take a break. Because truthfully, all of the indicators that I have in other words, everything that I have hooked up to AI, is it's telling me no trade at all because I have all these sentiment things hooked up to Grok and Claude and OpenAI and DeepSeek, et cetera. So we're scouring the internet now and we're running these formulas and it's telling me, hey, buy or don't buy, neutral or hold. And it's saying no trades at all right now. Actually, the most negative scenario, it's too choppy with the ranges. That's ultimately what it's telling me. So wanted to jump and look at XLE for a second. We came off really aggressive off of it. Now note the map that I had here, thinking that we would do something like this as far as a pullback, maybe to about 54, 52 in that range. Pretty much is what we've done. Now let's take a look at Bitcoin. Because ironically, we are getting a little bit here. However, it doesn't look to me like it's going to hold. I still think we head back to this 49. We have some kind of liquidity crunch. And there are two big issues that I see as Swan events right now. One, Japan. Japan's getting really nervous for two reasons. One, because the Japanese don't like what we're doing in Iran. And two, they're pushing such a high number in the US dollar JPY where intervention is not just likely, it's now in a category of when. And that's going to be challenging. So that could unwind the yen carry trade, which will affect our liquidity. On top of that, we have all of the sheiks or kings in the Middle East now really sort of trying to pull away from the United States because they're not happy how this played out. And we're talking trillions of dollars they have invested in U.S. equity. And I think the first place we're going to see it is in Bitcoin. Now, also, one other thing I wanted to note is that the president of Taiwan met with XI, it puts in question Taiwan now and semiconductors because TSM is going to absolutely get walloped if some kind of deal comes out. And the U.S. is probably going to force them to move some of their assets outside of Taiwan if they're able to, simply because of national security issues. So we have all of this smoke around us here. It's very challenging to get long, especially looking at that SPY chart and thinking that, hey, this bull market's just going to continue here. I still think the higher catalyst is that if we do get a ceasefire, it's short-lived. And, the numbers that we've mapped that out a number of different ways, a number of different times. If a ceasefire a true ceasefire comes into play, the timeline that I'm getting from AI right now is 6 to 8 weeks before it breaks. So that just really adds a dynamic. And to be candid, I've not had this dynamic before in any other form of trading. In the Great Recession, none of this. I've never had this type of catalyst with the war. And to be very candid, since World War II, I don't think there's many traders around who have seen this kind of progression or necessarily looking at what's occurring. I mean, we had the oil blockade, but to be very candid, at that point, we weren't as dependent as we are to the refined products and everything that come out of that, because really it's not just oil, it's the refined products, it's the potash, it's the natural gas that's been cut off to Europe. We now have all these pipelines that are broken, so we're going to have some of our trade partners that start wobbling. We're pretty aggressive. All right, so let's look at what we have on here. We still have crack. I'm still going to hold. Unless it takes out this shelf here at 45. We have Sentinel still. It's working, but it's not as perfect as I would like. Overshot it just a little bit. We're still just sitting there holding, thinking it comes out of this. If it does break below this 1278, then I'll cut and run. XLI, we're still holding, and it is running. That was probably the best trade I've put on in the last 2 weeks. We're looking for a target here of roughly 215 to the upside. So I think this is a multi-quarter or probably multi-year hold, because I do think this runs into the late part of August 26, and then we'll see how euphoric this gets, because I think there's a lot of potential traffic with what's going on in the Middle East back in industrial manufacturing in the U.S., because now we realize that, hey, we really can't have those resources overseas. We need to make it here. There's some things we just can't have there. There's too much risk for us, because look at the trillions of dollars we've already spent. Well, not quite trillions, but it's probably every bit of $500 billion in losses related to the Middle East. So if that doesn't convince us to invest in industrial production back in the United States, I don't think anything will. Then we also are holding Google. Perfect entry. Love it. heading back up to about this 459. Now Link's still chopping around. I'm still holding it because it hasn't broken here below. We takes out this body at 843, then I'll close the rest of that out. I did trim it back. UAN, I probably am going to cut this before the end of the day. Still not done nothing wrong, but the dynamics of what I'm seeing in the Middle East, I don't have a lot of conviction that we're going to see the wash through into potash. And I can't, which fertilizer, which I can't exactly explain why it's not washing into it. We have spot at the highest price it's ever been, just like oil yesterday hit the highest price in history. But yet, it's not washing into the partners or the suppliers like oil is washing into those markets. All right. MOS, we bought back into it down here right at about 26, 25 bucks. We're just trying to get back up to this number because I do think it does that. This is an overshoot as far as I'm concerned. So let's jump in and look at some requests. And we had SPWR. I don't like it until we get down here, really, because we've broken the shelf. We've wicked below it. Body, one candle, next candle should close below that. There's nothing here. I mean, we got this 106, but there's no, we're already below this back test. So the most likely place is equality back down here around 75. I hate to say it, that's it. I still like Microsoft. I cut my position last week, and I'm sort of regretting I did, because I did think we were going to here after it continued to break down, but it's looking now like it was an overshoot. So I don't know if I'm going to put something back there yet or not. I don't have conviction in the longs here, and until my indicators tell me to buy, I'm probably not going to add any longs. All right. Now, I wanted to look at Tesla because I think Tesla has a shot of going back to 250. Now, we also have a speed line here that comes in right dead where we are. So this has got to break. Once that breaks, it really does open up to 78.6. So it'll be a nice short. And I'm eyeballing that with market weakness. I think it has a shot of coming off. Not only that, they have serious supply constraints related to manufacturing, related to what's going on in the Middle East. So in my view, this is a round trip candidate, potentially. All right, wanted to look at Unity. It's coming off that low. 50% back is totally viable on this one. We get any kind of back test here. This is one I might take a shot at long. However, just being candid, my last couple of longs here on Unity, I was poorly positioned. I tend to not put on trades in names that I'm wrong about multiple times. And I've been wrong on Unity a lot. Even from the beginning of the move, I couldn't see it. So 50% back looks at about 34, but pretty solid. I mean, good name. We come back and test this little shelf right here is what I'm thinking. Maybe this, what is that? I can get my mouse to stick. It's roughly back 20 bucks. That would be a highest conviction entry right there. I would like to take that. That would give me some serious conviction. ENPH. Now, that corrective leg that I mapped out looks to me like it's totally playing out. So it's going to push back to about 29. Hopefully you're not holding on this. You know, anytime you shelf break, confirming trend support, whatever you're using to manage your risk, it's in a market like this that you need to stick to your guns. If you put a stop, stick to it, because I do think this heads back to about 29. Then I get interested depending on what the divergence. Hold on a second. Let me get my RSI up here. I wasn't actually looking at that. Let's see why it didn't. You know, sometimes I have so many indicators, it doesn't populate them. So, you know, RSI right now we're confirming, so it's not done. MACD cross is clearly crossing and rolling over. This is not done. Literally, we could come back and test 21. All right, Unity, or UUU, excuse me. Good spot to try a piece going long again, right here. So invalidation would be back below 17. Confirmation would be a little bit higher here on the breakout at roughly 23.78. But, you know, it would target, and I've got a very shallow bid here. You know, I looked at the breadth here. This is a leading diagonal, and quite often pretty shallow on a leading diagonal. So that's math. Doesn't mean it's not an impulse. It just means that it potentially could be shallow. All right, let's look at AEHR. Good spot to take partials. However, it's got some significant upside. Let me just do equality. 2618. It measures all the way to the 426 with this move. 4236, 137. It's a good spot to take partials. General 1, General 2, General 3 would probably be shallow or an overshoot. So, I mean, I would clearly be taking profits at 92, depending on what you hold, just from the look of that. And I'm just trying to visualize what's there. We are confirming. Nice volume pop, one of the highest volume pops that we've had outside of July of 24. We've gotten more of a pump than here, right? And after that pump, what did it do? It gave back 618. See if I'm right. Yep. Came right back to below the 618. So, you know, your potential, I'm just measuring what this potentially could do, assuming we get this 618. So it'll come back and take out 48. So I would put a confirming trend support line on this one because that's the best way to manage right here. Go up to 50% of the body of that candle and use that as your anchor. So if it took this out, I would be trimming for that reason. So use 54.46 roughly, and then 627. It takes that out. I'd take at least 50% off. That's how I would manage. AAOI, it's a little extended. Peaking drive 1, peaking drive 2. So we're going to peaking drive 3. Maybe stack 1, 2, 3. So ultimately, I'm just trying to measure this in my mind here. I'm going to drop this off. Hold on, remove it. I want to put a new one up. So we are going to just measure this leg because this we're going to look at as a 1. 78.6, 618. Pretty much there. Third, 78. So probably 89. Then we roll back over. So let me throw a fib up there as far as potentially where that would pull back. So 78.6. So back to about 122. So roughly 165. Is probably a good spot. Again, confirming trend support would be a great way to manage this. Now I'm just going to come off of this particular low here, go right up to the body of that lower candle. And obviously that's confirming trend support. That's how I would measure that, how I would manage it. And I don't know why I don't have this on because I've owned it at a number of different times, but not now. That seems to be the case. After January, that seems to be my MO. Okay, so use 971 and 107.23. All right, let's look at Reddit. Looks like it gets out of here still. It's just an overshoot. It's not, it really kind of confirmed here. However, I would say this kind of invalidates this once we get back above this line as far as potential shot lower. I mean, it still could. Market weakness realized in very volatile times when there's a lot of uncertainty, the book doesn't, macro micro does not matter as much as the name and whether or not somebody's willing to hold it when risk comes in. And I would classify Reddit as a risky name, because it likes to dump, it likes to dump. And on top of this looks like an ending diagonal or a leading diagonal to me, which would look something like this. So, this is our 1, this is our 2. We could classify this as our 3, maybe 4, maybe 5, heading back to the downside. So you want to clearly manage it. Gets below 50% of the body of this candle at roughly 142. Let me see what that lines up. What is that thing is there? Little confluence at 140. So below 140, that's where you're tested it here, broke out, back tested, body didn't clear it. We slice right through it here, so it has no support to the downside once it breaks. So 140 breaks, we're going down to here. All right. Boy, I was a little wrong on that top, wasn't I? Well, no, I had 3 peaking drives. We had no flush, none. And it's not slowing down here. Confirming trend support is the only way to manage this. You own this, hold it. Reason until that trend breaks. So your trend, I would run it off of my 50% of my wick, only because you want to give that just a little more room. So the number I would use here would be this 45.65. No, we don't want to use that one, far up there. And roughly 688.55. Otherwise, hold. It's, And this, the need for lithium is not waning. I mean, we have shortages coming, so that's a name that makes total sense to hold. This is going to break out. We're going to head up towards 6. I think pretty much given. We broke above here. We've tested it, came back, sort of holding this next shelf below there. Closes. Keep the invalidation where I had it at roughly below 120. Body of a candle closed below there. Then I'd probably trim and wait and add it back here at 90 because then it's likely to pull back to there. All right, NEXT. Pretty low. I'm going to go out to the monthly on this one because I drafted it that way. Confirming trend support we had off of that wick. Now it's time to move it back up. I'd go right to the 50% of that prior candle. Reason is the body of this candle did not clear above the prior candle spot. If it was above there, I would use the base of that candle. In this case, I want to use 50% of that candle as far as my confirming trend support stop. So any other questions today? Amazon. Perfect. I think that map's pretty close. I think, when I did the, I dug into the, the existing AI infrastructure, and Amazon owns a lot of it, except for we can't just buy AWS. I would like to buy just AWS, but we can't buy it. Or at least I've not found a way to buy it. So the other catalyst that I highlighted in that article, and I'm trying to remember the name of the article. Isn't that horrible? Let me go. Who gets paid? AI infrastructure shopping list. I'm going to put that back because that is, I pinned it, the special report, so you guys can find it. So, I expect, you have 2 things going on. Consumers are slowing down. So the retail side of Amazon is slowing down. We're starting to see a little bit that of selective buying. If you look at some of the retail like for example, Walmart, even though same store sales are up, they're buying lower ticket items, or everybody's buying lower ticket items. So that's going to be the same case. So you're going to have this, okay, yeah, revenue's increasing because of AWS, but yet retail is declining. So it's kind of going to offset it. So that's one reason we went back and we did that research on who's going to get paid from the AI infrastructure that's currently built. And the next stage that we're going to find out, once you start seeing some of the major Mag 7s back off from their CapEx. In other words, we want the news. Okay, we're going to have to push our CapEx spending out to 27, 28, 29 because we have supply metrics problem. That will be the catalyst that we want to look at crypto miners, because then they'll start looking at converting those to AI infrastructure. And that'll be a sector that comes after that timing. And I can't really pinpoint the time on that. That's probably 9 to 13 months out. Hopefully we can see it when it happens and make a decision from there to go. And let me look at OSS. But I still like Amazon back. I gotta get my chart back. What did I do? Chart back. Right chart. It would sure help. They took out confirming trend support. Technically, it depends on how you push that up. It's going to build out this flat. I don't know if you're looking at for taking profits or not. It takes this 754 out. I'd probably close it and wait for it to come back to the buy zone, because that's the optimal buy zone. Even though we have this, there's it's a little dirty. If you look at the wick, if we held this 720, it's a building shelf. Once you're wicking consistently into that shelf below your highest price, it's weaker. So there's not a lot of strength there. Plus, that's pretty aggressive sell. So the question is this an ABC or is this an impulse leg down? That's sort of the question that I have here. In this market, I don't like the breadth of this, because granted, we did take this out. Pretty much equality was hit right here. But what happens if it's a 5? And we're going to come back down here. And then this shelf becomes very viable around $5. So, if it takes out that roughly 750, I probably would be trimming a little bit for TE. And it's so challenging to hold stuff here. It really is. Because even if the name's working, prime example here, confirming trend support got you out at about 780. We're already down at $4. All right, doesn't look really positive here. RSI is confirming to the downside. MACD is wide open. It's not done. It actually is a potential reversion to the mean. And the reason is because this kind of becomes just in how that failed there. So this is kind of a flat. And I think I looked at this way one other time, and that fooled me right there, that move. However, once you take out these shelves, that's something when you're looking at a specific name, that's why management of the position once you're in it is so important, especially in the dynamics we're in with a market like this, because sellers will take over real quick. And this is a great example of this. Now, is it viable there? MACD crosses, maybe. But it has to, I would be more inclined to think that we need to come down here and test this ledge first before I get interested in buying it back at $3, only because of the look. All right, let me go back to Sentinel, just to cover that one more time. It's done nothing wrong. It's clearly testing the lows. It's an overshoot, right? It gets below this body right here, the invalidation line I have. Body of the candle closes below 1251. Then this becomes 981. That would be my stop. Okay, any other question? AMTF. Boy, you guys just put a bunch of names up there, huh? That's okay. All right, CDE Mining. Got to throw some fibs up here, see where it lines up. 2618. I'm going to call it peaking drive 1, peaking drive, maybe peaking drive 3, but I bet you short $25. I'd be taking profits $25. And then I would be thinking that at that point, we've already rolled back to the 50% fib. I would think we back test $13 just from that look. Once again, I want to go out on the monthly. I want to see what this looks like on a bigger picture. Clear rejection here on this sell side imbalance right here. Notice how just wick to it. Just wick to it. Perfect rejection. We're going to test at least this shelf at $11 for the back test when it gets there. Might get a third drop. Might get an overshoot, but it's going to be an overshoot. Peaking drive 1, peaking drive 2, you get a peaking drive 3. But I would think it'd be a flat top, more like a head and shoulders. So it would look, this would be like what most likely it is. Then we come back and test the low is what I would think that would be how. AMTX. We're holding, closes below that 213. I'd be covering it, but that wick, I think I covered that wick last 2 sessions, actually, maybe. One thing, ATM, Amentus likes to dump off these wicks. Anytime you get these wicks, that means consistent, perfect MO. Doesn't ever change. So why would this one? Problem is that's a long way down here. I'm not sure where you're holding. what you're holding. I'd probably be more inclined to sell my common shares here and buy. I think you got 250 calls you could buy, maybe do some leaps, reduce your exposure a little bit. That would be my thing. I done sold, I don't know, it was $1.50. I think I sold mine. I was impatient, didn't hold it long. All right. So anything else, folks? We're good. Well, we're going to call it a day then. Great trading. Until next time. Hopefully it was helpful, guys, gals.